Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the Greedy Trader channel. So for those of you who are joining me for the first time, this is the channel where we talk about all things market profile. So if you're not familiar with market profile, then I would suggest go and have a look at some of the videos that we've done in the past, some of the positions we've looked at, trades we've called out, and see for yourself. 95% of hedge funds and institutions use market profile. If you're a futures trader on a prop desk, wherever you are in the institutional world, I'm sure you've heard of market profile. So for those of you who are active listeners to the channel, then this is just another video. Alright, so let's jump into this. So we were going to talk about so let's pop on the screen here. So I'm going to start with this is the Aussie dollar. Right, so I'm going to start with the Aussie dollar. Right, so in our last video we talked about this. Again, there are a lot of concepts that we discuss here on the channel, and you know, again guys, we do this because not only we do like making content about this stuff, because one of the things that we find in the trading space is that people just make content that just sells. Really, it's just, you know, you pop on, you see a guy saying, you know, this is how you make thousands and thousands of dollars every month, blah blah blah, and that's it. Basically, there's no meat on the bones, right? Everyone's giving you the same old strategies you see everywhere else, and we all know when we grind it down to the basics, the market goes up because too many people are short. The market goes down because too many people are long. So in effect, what's happening here is people are getting squeezed on either end of the scale. Anywhere between that is just dumb money, right? So let's make it tangible. Now we always talk about offers and bids, right? Liquidity, where liquidity is lodged, etc., etc. Now let's take the mask off this stuff for a second. Right, so I'm taking a look at the Aussie dollar. This is a weekly profile, and we can see very clearly that there was a lot of offers stacking midway on this profile coming down. We had a lower close, right? So we can see the little blue arrow here denotes the close. So we got the open, we got the close, right? Obviously we've got the initial balance and so on. I have a ton of videos already on this, so just check them out. I run the School of Investing. So I'm a little bit, my throat's a little bit scratchy, so you'll hear me croaking away. But I run the School of Investing, so I got a ton of content there already that you guys could you know, have a look at and, you know, see what works. I mean, everything I teach, everything I talk about is stuff that I know works, and it's not just me. I mean, most people who are institutional traders know it works, and most people who are doing quite well with trading know it works because that's what they're doing themselves, and they're just maybe repackaging it, making it look a certain way. I always comment that people are just really looking at data and they're analyzing it, and that's it. So we can see that the offers were clearly stacked. So this is tangible information. We know this because we had a double distribution, the market came down. We kind of spent a lot of time trading here, hence we have the extended out TPO over periods, and then we close lower. So clearly there were some sellers here, right? So this is a strong level. So what rests above this level? Okay, lots of liquidity, right? And we have the value high, which is the highest value price where this move came from. And what other information does that tell you? It tells you that the most sellers that initiated the down move on what would have been a swing trade worse in here. And that means that if it's a big swing trade and it actually moved the market, then it suggests that there were a lot of traders who are institutional based, who had a lot of money. And that's the only reason why we reference institution. Everyone's retail. I like to say that there is no information advantage anymore with technology. Like, it's just about risk management, right? So institutions are a little bit better at this, so they will deploy a lot of capital because they can manage the risk around that capital. And even if they can't, I mean, who cares, right? They raise the money from someone else. It's not their money. So you're going to find that there's a lot of big moves that tend to come from institutions, and that's the only reason, is that they got a lot of capital. So it's a one-sided affair. So obviously we can see that the weekly profile down move, we opened, went up, clearly hit offers, and boom, we're down, right? So this has to be institutional money moving the market. And if we look at where, obviously I don't have any more history data on the profile, but if we look at what's technically happened here, is that we've had a huge responsive seller, so a lot of capital deployed here. It left a single print. So when we think about this, we think about there was less competition at these highs, so no one was willing to be a buyer, basically. Hence we have a print. So these prices are untraded. So once they were sold, once we traded off those prices, we never went back there, and that means that competition was really high, and as a result, you know, we were unable to trade those prices any longer. This was the highest point, right, of that particular move. Right, so we're now down here. So this is a market moving move. What happens next, right? We see a bit of a build up, right? So this is likely, maybe, I don't know, other institutions, retail traders, maybe, who knows, that are buying in to the short side, right? So they're expecting that we had a big drop and then we're going to get a rebound. So we get a lot of accumulation, right, at this point, where people jumping in, right, expecting us to rebound, right? And then the following week we sell off and we break that level. Again, another piece of information. Is this tradable? Well, if you're going for a short-term weekly trade, then yes, it is. If you're looking for a swing position, then, you know, you don't have any information here. This market is already too short. And just like I said, if a market's too short, then essentially we're going to sit down and expect a reversal. That's kind of what we see here, is that eventually we hit a reasonable low, we start to build up again, and we can clearly see that the shorts were covering, right? Because if they weren't covering here and these were longs, then this has to be liquidation, right, from those longs, and this has to be shorts covering, right? So in one case, the people who were wrong, who were trying to get long, are now having to sell to the people who are short and want to buy back, right? It's really simple, right? They're offside, they need to give up the ghost, it's the end of the week, and bigger traders now want positions, they realize it's all done, so you get a bit of covering. And what happens next? Market moves, starts to creep high over a couple of weeks, so we develop a certain level of balance. So we got bits of information here, right? So the first bit is, right, there's a bit of a teaching session, but hey, the first bit is we can see a build up of liquidity both sides. So that tells us that, well, there was liquidity here, for example, so this area here, so that's reasonable, let's say, resistance if this market is going to continue lower, and we had liquidity here, right? So now what does that tell us, right? We got two areas of resistance, right? So we got resistance, and we will go through this in a minute, right? And then we got, so we got liquidity here, right? Well, liquidity here, right? And this is all sell side, and then we have covering, which, let's say we didn't see all of this, we can think of this as buy side, and that was confirmed the very next week by the upward rally, right? So we know there's liquidity here. Now I want you to think about these areas that I've just drawn off, right, where there's liquidity, right? Now you can clearly see how the market reacts to those areas. So we bounced off, traded upwards into liquidity, sold off, closed lower, bounced, sold off, closed lower, and then we traded slightly above the liquidity. So it's what we call a liquidity hunt. So in other words, what they're trying to do is grab stop losses. If anyone was trying to get short, they're going to have their stops relatively above these kind of highs, right? And for the bold, they're going to be up here. So these levels are going to have a lot of stops, right? So you see the market goes up, clears some stops, comes back down again, right? Holds, goes up, clears some stops. We can see there was some competition here, so someone was trying to sell this down, and then we go down, hit like bids, boom, right? Reverse, go back up into liquidity. We push a little higher, hit the offers here, test them. We come back out, close. We come down, test some liquidity, close a little higher, and then we break it, right? What are we looking for? We're looking for a reaction now under these lows, because what that tells me is that, well, this market is heavily short over a series of weeks, and then we've got a liquidity hunt now at the bottom, and that's confirmed. The following week we close back up. Immediately we can confidently say that we're looking now at a bull side rally, right? And this is over a longer macro picture, right? Because each profile here is a week, right? So we've watched this bounce back and forth. Now think about it for a second. If you were trading this and you traded into bids, right? You know this is where the bids are. You can see it. It's like it's no rocket science at this point. You know the offers are up here. And let's say you know this market is too short, so a lot of traders are short, so the general direction is to be long to the upside. But you're a swing trader, you just want to play this back and forth. So as we trade into the offers, what we're looking for is weakness, and realistically we can have our risk anywhere above where the strongest offers are. Makes sense, right? We know the big money was moving the market down at this level. This is the latest sellers, the latest strongest sellers, right? So we know there's a good protection here for short-term plays, right? If we have a long-term bullish direction, then we are looking for reactions at bids, right? And that's what we see, reactions at bids, right? And now we get a liquidity hunt, right? Market, we can see a strong move here, so now we're forming supports, right? So you can see that here, that we got some bids here. We know the big money is trying to move this market up. Right, we're back into the liquidity zone. Where are we going to go next? Well, we've cleared stops here. Clearly the next level that we're going to find stops is here, unless we find resistance here. So if we're traders, what do we want to do? Well, fair dues. We don't know what's going to happen here, so let's say we get long at this point, right? We can see there's a lot of competition. We're back up, we're getting long macro wise against the week. We'll talk about stops some other day, right? Let's say we market open for the week, we pull back a little bit, we get long, we buy, right? What are we targeting? We can see where the offers are stacking. Now we can see liquidity is built up, so we know that this is the main foyer. The market might find some resistance within here, but we are anticipating that if we're going to draw in sellers, we need to trade, just take out the stop sitting just above here, right? And that's where we go. Take out the liquidity and we start coming back. So again, the moment we see a gap in value, inefficiency, we're breaking back in. This is a short side play. Where do you think we're going to land? Back into liquidity. So we had bids here, bids here. So if we get a reaction here, that's what we want to do. We want to buy. What do we have here? Right, look, gap in value, guys. We got gap in value, so that's what we got here. We got a gap in value, so we know range. We're definitely going to trade above the highs. Now there's no more liquidity on here. If this market is long-term bullish, we need to break these highs, right? So that will change the picture entirely. So now we go into our macro picture and see macro-wise, can we see a long-term play that we can construct on a macro chart and see where this is going to be potentially, right? Is this a bullish macro picture? If it is, so what I'm trying to say, guys, is that we should only be looking at long-term charts, right? Monthly, weekly, and we need to be able to see where the long-term is. And if we can see that the long-term is going to take us above these highs, then this becomes great positioning. That's why we should have done this research earlier, so we then know, do we want to buy bids or sell offers? And if I'm going to buy bid, then that's where I'm going to be looking at position every time we get into solid bids and we get a reaction. So there's a lot of time for you to wait this out and see. Even if I were to split this profile, and then you can look at dynamic entries, look at how long we spent testing out this strong bid level, right? We spent a long time. Now bear in mind, we still have a gap in value. I personally would have been a lot more interested in these bids, but seeing that we're bouncing here and getting a reaction, then I'd play this at least for the gap. Well, look, it's about 128 ticks, right? If I'm lucky, I will be able to trade mil value into these offers, and then maybe I get a sell off there, right? That will be my game plan. So now I'm planning what I want to do. So I'll be long here, looking to kind of chase into this level, boom, and then I'm out. if we start to go higher, I don't want to chase long anymore. I want to wait to see where we're going to find sellers again. Now, my bet is if we look at the statistical areas of value, so we've got value high here, we already sold off value high once. So if we retest it, then we start thinking about 69.70, which is value high again. And that's why I'd look to position to see if there's a reaction for a sell, because there are not a lot of offers up here, right? So there's not a lot of reference with the exception of the competitive. But so I have to use the highest value recommendation from that particular period as my resistance level, right? And then I can measure that against range and other things, right? So there's a little bit more, more to do here, but at least that gives me some perspective. So why am I telling you all of this is because I want you guys to understand that what I'm doing here on this channel is to expose something that you will never hear people talk about. There might be a few people here trying to teach certain concepts around this and whatever. There are lots of people, right? But you're not getting the whole picture, right? And that's why I've put my profile up here. I've shown you what institutions are using, and it doesn't matter. I don't care if you don't believe it or you think it's it's not what you know, or whatever you want to think. It's entirely up to you. But the one thing I can tell you is that if you follow this, your trading will change dramatically, right? If you follow what I'm telling you here now and you start putting some of this into practice and principle, you are going to sleep well at night. I can assure you this. And the reason for that is that you start to look at the market in a different way. That it's not about the some of the fundamentals and all the other stuff that people talk about. It's really a question of, okay, are people offside or not? And you can see where they're offside. If you can see that, then you have a trading edge, right? So you're just waiting for people to be offside. Long or short, you don't really care. Now, if you can't trade like this, you got everything in front of you, you got the macro in front of you, you got the big picture, the small picture. If you can't trade like this, then maybe you can't. Maybe this is not going to be a thing for you, right? So the reality is that you should be able to put the pieces together. And that's kind of what I do here, right? So my entire channel and my entire school of investing, which I've launched around the channel, mind you, is to kind of get people in that frame of mind where they understand that the way they were doing things before, if it's not working, it's just not. If it is working, and if you're if you're hitting those dots, I mean, there's various ways to analyze a market. It's not just saying my way is the way, but if you're not resonating with some of those methods, then you need to start looking at what I'm doing. Basically, it's all it is. And if you are, then fantastic. Go exactly where it's resonating with you, because that's what's going to make you money. That's what's going to help you succeed, and that's the reality of it. But if it's not working, then you need to start paying attention. So anyway, that was the Aussie dollar. I felt like it was nice to just do it on the Aussie. Relatively, it's going to be the same on most asset classes, same pattern, same everything. But on another video, we'll kind of do that. But I hope this one has been informative. I hope that people have seen it and they kind of get what's going on here. And I'm trying not to be very shallow with this stuff. I really want to kind of put it out there so people know and see what I'm looking at. They can understand it, and I think it helps everyone. But guys, hope you enjoyed the video. Till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?